Yo, what's up, people? It's your boy named Diesel reporting to you live from Mexico, same shit. Yeah, I'm here, rocking my Nigerian jersey. Yep, World Cup season is here, baby. So it's your boy named Diesel, and I'm here with my co-host as usual. I got I2XP, and we're gonna talk to you about the what's it called again? You mentioned the Tulsa. Is it Tulsa?
Tulsa. I said Tulsa, Oklahoma. I said Tulsa, Oklahoma, right?
Gotcha. Tulsa Real Estate Fund by Jay Morrison.
By Jay Morrison, yes. We want to talk about that. All right.
All right. So how do you feel about it? I've heard about this fund. As a matter of fact, I'm actually invested in this fund myself.
Oh, you are?
I am. Yeah, I put something in there because I like to see other black people, a black brother like myself, doing positive things business wise, and trying to strengthen the economy overall. And I'm like, yeah, I like what he's doing, and I think he's the right person for that job. But at the same time, I know he's also receiving backlash from a couple of other people, about saying this, that, and the next. So, how do you feel about it? What do you think of the pros, the cons? How do you feel?
I mean, I don't see much cons from a standpoint of an investor. I mean, I could talk about cons from a standpoint of him as a fund manager. He's he's entering a zone that he's going to be new to, and it's I think it's going to be worth a ride. But the bottom line right now is that they have money to make mistakes, to collect data, and I think they have enough room, and he has the experience as well too. Based on the story that I've listened to, he has the experience to make it do. But when you start operating, if you operate $1 million, $2 million a year business, and you're now at a $10 million level where you have $10 million to play around, I mean, it's a different ballgame entirely, So I think there's going to be a learning curve for him. Now, from an investor standpoint, there's nothing. There's no guarantee, period. As usual, there's no guarantee. There's a risk.
Say that one more time. From an investor standpoint?
From an investor standpoint, from somebody who goes in there to invest, there's no guarantees. So, and it's as simple as that, And I think there's a 8% preferred returns. And then it's a 50-50 split share on profit. I think that's fair for a minimum of $500 investment. I think that's fair. And I think if you put money in there, I think you should move on with your life and go do other things that you have going on. And, zero expectation. If you're successful, awesome. I think it will be successful personally, because there's room to make.
Am I breaking up? Because you're breaking up. Am I breaking up?
No, you're not breaking up.
Hear me, okay. I can hear you now, but for a second, while you were talking, I was coming in broken. Now I can hear you.
Yeah, it's probably the connection on your end. It's good here.
I don't know if it's good on your end, man. It's good here.
Well, you're in Mexico, so I think we can let people be the judge of where it's good.
I can show you the Wi-Fi speed, though. I can show you the Wi-Fi speed on the bars.
I know all about.
You sure you're not in Nigeria right now?
I know all about misrepresentation.
You're in the basement somewhere right now.
I know all about misrepresentation of speeds in third world countries. Trust me, they do that all the time. You go to Nigeria, they tell you you have broadband, but you're right.
No. You can see the megabytes per second and whatnot. You can see that stuff here. But yeah, keep going. I'm listening though. Now I can hear you. Now I can hear you.
It's better now. All right. Mm-hmm. So as I was saying, I think the pros and let me be straightforward. The pros and cons of investing in a fund like this. The pros is that you get to leverage somebody else's experiences and their desire to want to be successful. Of course, they don't want to go under, and you get to leverage the work that they've put in. If you listen to his video, he talks about how much work they've put in as far as SEC is concerned, regulation, how much they've paid the lawyers to make sure that the paperwork
is transparent and all that stuff. Yeah,
they're transparent, So I feel like the transparency tells much on their desire to truly want to be successful. But there's a reason why they don't give guarantees on this type of vehicle. Because truthfully, there's no guarantee, even for them. It's all a risk. Of course, they have money to play now, but it's still all a risk.
But they do have a return that they're showing people that they expect them. They do have the return that they're showing. Okay, this is what you should expect. And now
They have a preferred
yeah, preferred return. And then they go above and beyond that. They have like a, the thing they're going to do a 50-50 split with the excess profits.
Right. So here's the thing about preferred return that I want people to pay attention to, right? There's a difference between returns and royalties, right? And profit. There's some distance differences there, right? Bottom line is that for all of them, at the end of the day, nothing is guaranteed. However, if you make a dime, right? If you make a dime in profit, not in revenue, okay? Revenue, if revenue is not up to your expenses, that's not profit, right? That's loss, right? So if the fund has profit, they pay 8% first before they start splitting 50-50.
So what they're saying essentially is that 8% first will go to the investors. So they're going to look out for the investors first and say, hey, let's take care of you guys. You put your money in this investment. Any returns that we get, initially, that first 8% is going to go to you to make sure that you're good. Then after, above and beyond that, then they're going to start splitting the profits.
Close. But they're going to look out for their expenses first.
No, I'm saying the same thing. So expenses come first, right? That's what I'm talking about profit. When you use the word profit. You talk about revenue that exceeds your expenses, right? So once the revenue exceeds the expenses, you're in the profit zone. And once in the profit zone, the first 8%, they're going to give that first 8% to the investors. And anything beyond that 8% for the investors, then they're going to split it. And obviously, the fund has to make money. Like he's the manager, and other people who work for him have to also get paid. And that's when they have the 50-50 split. But what they're trying to say to people with that 8% preferred return is that, hey, this 8%, before we even pay ourselves and try to look out for ourselves, as far as profit is concerned, we're going to take care of you first. Then we're going to take care of ourselves.
Yes.
So it gives you that comfort as an investor to say, okay, you know what? They have our best interests.
They have there's the way they call it. They have skin in the game.
Not just skin in the game. Skin in the game is the fact that he's also investing his own money in there, and other people are investing their own money. People who are behind the fund, including him, are putting his own money, so they have skin in the game. That's one thing. But what I'm saying here is that
in that terms, it doesn't have that much skin in the game.
I know, but that's what skin in the game is referred to. But just to be clear for people who are watching out there, when you say skin in the game, how much money does he have in the line in his fund? Like, put your money where your mouth is. So what that means is he has put his money where his mouth is, in the sense that he's put not a lot, but he's put some of his money or his capital into the fund, right? So now, what I'm trying to say here, though, is that 8% with preferred return, the way you're looking out from an investor perspective, right? If you invest in that fund, what that's saying to you as an investor is not necessarily skin in the game, but what that's saying to you is, hey, before this guy pays himself and says, hey, this is my money, I put in some work and now here's my profit, he's going to pay you that 8% first.
Right.
To make sure you get taken care of before they take care of themselves.
All right. Yeah. Thanks for clarifying that. So, yes, skin in the game means how much money he is investing in the funds.
Right.
Even in terms of that, I will give them credit, because it's true that for you to put such platform together, all the SEC cost and the attorney cost and all that stuff, and even time cost, like all the time they put in a team together to manage this thing, right? All of that, I would personally consider skin in the game, because that costs a person's life, right? But in terms of now after profit, right? He's not going to make money. What I was trying to say is that he's not going to make money until investors are paid. The funds, as a matter of fact, it's not making profit until the investors are paid first, 8%, right?
Yeah, exactly. And from the fund's perspective, sorry to cut you, the way that you even see investors, that 8%, they should almost see that as an expense to themselves. They should almost see that 8% as an expense to themselves, because they have to pay that first before they start taking any money as profit for themselves.
Right.
So from their perspective, they should almost see that 8% that they're giving the investors as an expense to them.
Right. So as far as to answer your question, is there cons to this? The only cons that I see personally is the fact that this is a business and it's a new territory for the fund managers, because he's never done this before. He's admitted that, but he has experience in real estate, and they're going to try to stay in the zone of real estate where they have experience.
Exactly.
But they're going to be buying towns. The way market shift happens when you're buying the whole town is a little bit different from when you buy one of it and the rest of the market have forces on the market. You know what I mean? So now when you're doing that, if the income is based on, also if you buy a whole town, are people going to be moving into the town? Like when you buy something in Detroit, you basically want to sell that based on, there are new companies moving in, there's the motor company, you want to say all of that helps real estate, right?
Mm-hmm.
But now when you are the sole control of a whole town that you buy, that's not an idea that I'm too flattered about, because then you got to tell me
That's a good point.
what is your plan to the economy of the town, right? So those
That's a
are
good point.
not necessarily cons, but a concern, a question, something you should answer, something we should maybe
Not a
work on.
con, not a con, but a concern.
A concern, exactly.
Not a con, but a
So,
concern.
because the
But
economy,
I agree with that. I just expand a little bit on what you're saying here for people who
yeah,
are watching. In general, if it's a regular marketplace, it's liquid. The other participants in the market, right? The other buyers, the other sellers. There's a whole bunch of people going in and out, buying houses, selling houses, or whatever it may be. It might be any kind of product. There's other people buying and selling. But now, if you're
working
trying to
persons,
buy a whole town, right? For example, now we can almost treat that almost as its own isolated mini market of its own. So now, if the other people buying and selling within that town, it's one thing because the demand and supply will work the way it usually works, as we all know in economics. When the demand is high, price goes up. And so when there's less demand, the price dips down. When there's too much surplus, too much products out there, then the price is going to come crashing. But now the economics are going to be a little bit different when you have one person or one fund trying to buy up a whole town. You're buying up a whole town now. That makes you almost like a sole customer buying everything. It's almost like creating almost like a monopoly for that specific town. So the way that market is going to react is going to be different from the traditional economics that most people are used to. Now, it could be a good thing. It might drive the price up because people might think, okay, maybe it depends on how they think through before they buy these towns. If they buy this town because they think it's going to appreciate in the next couple of years, it might work out, right? But at the end of the day, what the point we're trying to say here is now we're not dealing with a case where you're buying something and someone else your next door neighbor or another comp, as they say in real estate, is selling for a certain price and that affects your property and whatnot. In this case, if you're buying the whole block, that's sometimes like a mini market too, or you're buying the whole town, which is a way bigger version of that, buying the whole town, then that changes the whole fundamentals of economics. Things get thrown off, and the way it works out might be a little bit different from what people expect.
Exactly. So it's like in any market, it's really a demand and supply issue, and it's a matter of forces that we don't know yet. Because we at least he hasn't mentioned that in any of his video. He's had some good cases against all the naysayers. He's made some really good cases. Personally, I didn't have any naysaying about the platform because I love real estate. I mean, you love real estate. We know real estate is here to stay, right? So, but
it's real shit.
but when there's market forces involved, he was also a victim of that, just like I was in 2008. Got wiped out in 2008. So when that happens, it's real life shit. It happens. And when it happens, the bigger you are, the more it's going to hurt. So if you have a fund out there in the middle of buying and selling and developing real estate and stuff, it's not as simple as, oh, yeah, we got money, we can sustain it. It's also a matter of a balance. That's why I said more cons from a fund manager standpoint, from Jay Morrison himself standpoint, right? He has forces that's going to come to any new territory.
Here's an example for that. Say there's a real estate crash, and now people like, say for example, there's a real estate crash, and I want to sell a couple of houses. It's easy for you to sell. Okay, I want to get out of this house. I want to get out of this house. You want to sell. If you have a whole town now, you want to get out of those houses. You want to sell these properties in this town. Who is going to buy it? You think about that. Who is going to buy it? You already own the whole town, so who's going to buy it? You got to think about it. If people who are already renting there, I know that everything's going into shit, that will be stupid to buy at that time. So those are the kind of things you got to be concerned about. Okay,
exactly.
If shit is the roof, who's going to buy it? Who are your buyers going to be? Let's say if you want to sell, that's where you get out, right?
Yeah. So it depends on how much exposure they have to situations like that. Let's say, for example, they bought some kind of suburb in Detroit area, right? And GM and General Motors goes out of business, right? So people now start looking for jobs outside of that place, right? People are going to start abandoning their houses for short sales. That means they're not going to be making payment on a lot of properties. They call them non-performing assets. They're going to become non-performing assets, right? And now people are moving out, or maybe people are moving in, right? Or maybe you don't have inventory if you control. Now, eventually, hopefully, they create a marketplace or market forces where they can mix things up a little bit, where the exposure is not too much to the bad side. There's a balance that's going to be needed, bottom line, you know. And that's why I believe even big billion-dollar companies go out of business sometimes. They are billion-dollar companies, but they go out of business, they get wiped out, because market exposures is not something necessarily as simple as math. Market forces is not always math. It's a art and a science, you know. So I'm gonna say, if anything, I want to hear more about that.
There's always so much behind it, but the way I like to see it is it's about human behavior. It's about how people behave.
It's human behavior.
How people react. That's what actually drives the market at the end of the day, fundamentally.
Yeah, it's the confidence. It's the confidence of the marketplace, right? So what I would like to hear more from that as they continue to talk more, what I would like to hear more is how they plan to diversify the funds, right? Because just we're gonna build our book, we're gonna build
and I did
that's all key, right?
And that's something I like to ask him too. Like, you know, and that's what, because I know he's all about real estate. Me, I'm Mr. Real Estate, but at the same time, it's very, very good, and it's very important to be diverse. Very good and very important to be diverse when it comes to investing in any portfolio. Even if it's stocks, even my portfolio in stocks, I want it to be diverse. If it's real estate, I want my portfolio to be at least somewhat diverse. In real estate, just to be a little bit, just to touch a little bit before I go keep going in the direction I'm going, which is about diversity in your investments. In real estate, I feel one way they could do to save themselves when they're buying real estate, which I tell everybody, is buy low. You know, if you buy low, the market crashes, it's always so low that it could actually go, right? So if you buy low, you're already protecting yourself on the downside. If I buy a house for a couple $1 million, that's a long way for it to freaking crash, right? So the lower you buy, the less you could actually ever lose. At the end of the day, if you think about it, right? If you buy a house for a good price, at the end of the day, it's real estate. If it's the stock market, it could go to zero and it's gone, right? But at the end of the day, if things go down to, like, no matter how market crashes, if you buy a house at a good price, it's still made of wood, it's still made of ceramic, it's still materials, it's still sinks, it's still tubs, it's still toilets, it's still refrigerators. These are still things that have value no matter what. So no matter freaking what, that house still has value in it. You get what I'm trying to say? It's still a thing. At the end of the day, you know, there's still a freaking chair. You know, at the end of the day, there's a freaking table, there's a bed, there's a fridge. Right. These are things that have value. It cannot go to total zero, right? So that's different from real estate. That's different from stock market. And that's different from cryptocurrency. That could go to zero in the worst case scenario, right? Depending on the stock. But now, with that said, though, that does not mean you should shy away from stock market. That does not mean you should shy away from the stock market or cryptocurrency.
Make that clear. He's not touching stock market.
He doesn't. Exactly. And that's my point. I feel he needs to be diverse. And that's the best way. I understand that it's good to invest in what you know. And that's great. But at the same time, if you don't know something, at least get the resources of somebody to either educate you or run that for you. Because at the end of the day, you want to stay diverse. You want to stay protected. Because if you have the right stock market portfolio, the right options, the right calls, the right stocks, bonds, that could save your ass in the times of a real estate crash.
Yes.
Right? And if the stock market has a crash too, and you have real estate in the right place, real estate being that, again, the more stable and doesn't crash as volatility as the stock market would or cryptocurrency would, could be that passive income that keeps coming, or that big profit that keeps coming that could keep you there. So then you want to have multiple streams of income. If you when you're one tunnel and one focus, it's good because you know what you know. But it also limits yourself.
You have blind spots. You have all kind of blind spots now.
Exactly, because if something happens now, you're kind of fucked. So diversity is very, very important to me when it comes to investing. Period.
Good point. I've been thinking lately, not thinking, actually, I've been structuring my whole business lately around that when it comes to real estate. That, the idea of flipping and wholesaling real estate, that's cute, but it's only one source of income. That's one source of income. And one of the first things, at least if it's not the first, that people stop buying in the middle of a recession is a house. That's one of the first things people stop buying. However, one of the last things that people stop paying for is the rent, the roof over their head at the same token, right? So people, unless it's really, really bad, they don't stop paying rent.
Not necessarily. When it comes to, I agree with when it comes to houses, people will not go out and buy a house. You'd be stupid if the company is unstable, you're losing your job to go and buy a house. When it comes to people paying rent, people pay their rent, right, for the same reason that, it's so important that you need a roof over your head. You don't pay your rent, you're going to get kicked out. You're going to get evicted from that property. So no, I thought I said that people in the same token.
No, I said in the same token, the last thing that people stop, the last thing that people would stop, the last thing that people would stop that they will not touch, right, is the rent. They want to keep paying the roof over their head unless it's an extreme situation. So right there, we could already diversify. Like, yes, we're selling some, developing some, but we're also property management some, we're holding on to some, we're creating a scenario where we can hold on to properties and be able to rent out to people without having the need or being in a desperate situation to have to offload or liquidate.
Exactly. So in real estate, the different streams, the different ancillary incomes already, you can generate income. And flipping, you can flip, you can get big chunks of cash. Also, you can do wholesaling, get some stress and capture in between the margin, and you can get the passive income, as you mentioned, from renting out houses, and you just keep that income coming as the cash flow is consistent and it keeps going. You can't go wrong with that, right? And that's you always want to have a portfolio diverse like that. The flips give you nice big chunks of cash. The rental income is going to keep coming, and when things go down, it's going to keep coming, right? As long as you buy it right, it's going to keep coming. So
exactly. So right there, those are two ways to diversify. So even in the midst of the rental income, right? There's multi-unit, right? They can also invest in multi-unit, but there's also
to add on what you said earlier about property management. Like, say for example, if you're a landlord like me, for example, I thought about it. I don't really want to do it, but you're landlord and you used to do property management. You know how it goes, all that kind of stuff. You could actually expand your business because you have a fleet of properties already, and you manage so many properties. You're not necessarily doing it yourself, but I have guys who do it for me.
Oh yeah,
and those same guys who do it for me, if I wanted to do it for other people, I can have them do it for other people and charge them a fee. Guess what that is? Another stream of income, right?
Yeah, of course.
And I got another stream of income without actually owning the property, but you're getting income because people are paying you 10% of. That's what they charge. 10% of all your rent income is coming in, but from some of your income is coming in as property. So let me give you an example as a cash flow source. So let me give you an example. Say a building is renting. Keep it simple. $1,000 for each unit, right? $1,000 for each unit, and it's 5 units. That's $5,000. If I only charge someone the property management fee for that building, for all property, for all units, it will be $5,000, which is 1,000 times 5 times 0.1, right? So I'm getting 10%, so 500. So now, if I do that with 10 other properties, and again, I'm not doing this shit myself. All I'm doing is having the same guys who work on my properties, manage other people's properties, for other properties. Then guess what? That's 500 times 5. That's an extra 500 coming in. If I do it on 10 properties, then guess what? That's $5,000 coming in for people. That's just a service business.
It's a service, yeah.
And that's all it is. The only reason why I refrain from really doing that because most of the time I want my workers to work for me, right? Because I need them to do stuff for me half the time. So I don't want them to be. I don't want to have my resources to the point where it's so split out where I'm like, hey, I need you to do this, but at the same time, somebody on this property needs that. Or maybe at some point in the future, it might be something I'll look into. But the point is, as we're trying to say here is there are many ways to generate different streams of income, right?
Inside of real estate.
I'm trying to generate multiple streams of income, not just inside of real estate, but outside of real estate too. So I might think about it in the future, but at the same time, before I expand on that, I'd rather expand in other atmospheres besides real estate. Like, I do the cryptocurrency mining, cryptocurrency, trading. There's a bunch of other ways you could get all the streams of income.
So we're talking about, so we're talking about Jim Morrison, right?
Who wants diversity of.
We want to stay.
We're talking about diversity of investments here, particularly. And again, we're talking about real estate, but that's why my own advice to him or anybody in his phone watching is, what you're doing is good. And I like it. I'm for it. I also invested in myself because I just want to support what they're doing. It's a good movement. I'm like, wow, this is the right guy for the job. I like what he's doing beyond just the fund itself and the financial investments. I like what he stands for. I'm like, this is good. I'm going to put something in there. I'm going to plant a seed in here. And hope it grows. Not just necessarily I'm trying to invest because I could do something else with that investment if I wanted to. Obviously, I know how to manage my own money, but I want to support what he's doing, and I like what he's doing. So I put some money in there.
He mentioned something with regards to the diversity thing. He said, "Listen, we're open to other people investing. Like, you don't have to be black, right? To invest." He said that, but he said we want to develop our community, and I'm all for that. I'm just saying, when you say we want to develop our community, I want to hear more about how the economy of our community is supposed to be self-sustainable or sustainable with relationship to everything else that's going out here.
I hear you. I think part of it is partially. I think this is what I could be wrong from what I've seen, from what you talked about. I think part of it is, partially is not 100% figured out. Part of it is like, okay, this is my idea, direction I want to go towards. But as things go, you're gonna improvise. As things go, you're gonna learn. Absolutely. You're gonna learn, and you're gonna see which way the river is going to flow, which way you're going to go direct that stream to how it's going to go, right? As things go, you're going to say, okay, this is not how I thought it was going to be, but now this is what I need to do. You're going to keep learning, you're going to keep evolving. I know the direction he's trying to go to in general, and even he to himself, he can't say that this is exactly what I want.
You can't.
That's why it's
not guaranteed.
Yeah, no, not on the investment, but in terms of his vision for what he wants to do with the fund. Because there's so many moving pieces. So many laws might change. You know, so many things that happen. You can have a different president, you know. So if you try and buy a certain town, the town will say like, oh, they might put a new legislation that nobody's allowed to buy one town. You know, things change. You know, as a businessman, things are always changing. You have to be able to adapt. You have to be dynamic, and you have to be fluid. So at the end of the day, his vision, I know his vision is going in general, but you can't say that that's exactly. You can't just like, okay, this is what I want. This is exactly how it's going to be. Because
I mean, it's named Tulsa Real Estate Funds. That's what it's named.
Yeah, that's the name. But a lot of people have names. The name could change. The name could change at any time too.
True. But yeah, if it's open to diversifying to outside of that, sure. But even inside of real estate, there's also multiple ways to diversify inside of that too, and make sure that that thing is not too exposed to one side more than the other. Then also, I want to say kudos to the crowdfunding idea. I think is the way forward. I think I paid solid attention to the behind the scenes, like watching everything he's doing, starting from literally a few years back, you know, and the creating a movement that he has created, you know. This is a movement. This is more of a movement than
it is a movement, and I like it.
Than it's an investment.
And that's why I was for me. You know, again, I can manage my own money. Speaking of managing my own money, shout out to TMR Capital Group, right? We rolled that out a couple of days ago, or a couple of weeks ago, actually. And you know, that's so speaking of hedge fund, so I'm the fund manager for that, which is why I can relate to what he's doing, right? So TMR Capital Group, if you want to grow your investments, let us know. But now this is where I'm kind of different from how they do it. I'm not just taking anybody's money. I don't just invest anybody's money. Personally, I don't like to invest anybody's money by my own money.
Right.
But if somebody wants to invest with us or invest with me, you know, I'll have to talk to them, see where the money is at, you know, screen them before. And I don't just take anybody's money, because not all money is good money. You know, I want to know the kind of person I'm talking to. I want to know the kind of goals that they have, and you know, take it from that. I'm not just going to take anybody's money. That's where my own approach is slightly different from the whole Tulsa Real Estate Fund. I'm very picky with my clients, and I'm very exclusive when it comes to that. You know,
do they have to be accredited?
TMR Capital Group. Accredited would be preferred. If they're not accredited, there are other ways I could screen them to see if they're worth it.
Okay.
You know.
Nice one. Yeah. I mean, we'll talk about, you know, that's a good one, by the way. Thanks for the shameless plug. But, you know, we'll continue to talk about more of the other things. You know, creating a movement is leverage, you know, and it works.
Yeah, it's leverage. Leverage is very important. And it's almost like, you know, if you know what you're doing in investments, like, you know, people take mortgages, they take loans, kind of stuff. It's almost the same thing. Except that if you already have a proven track record for knowing how to make money and you know, making good money, which he has, right? Which I have, and that's why he's doing it, because now people know they could trust him, they could put their money with him, and he's going to help them grow that money, because he has clearly grown his own business to where it's at by himself, and that's kind of the foundation of standing on. Saying, okay, if I could do this with this, and that, I could keep it going. And just to touch on what you said earlier too, right? Which is kind of true. The having a 1 million or 2 million fund is different from 10 million, right? By the end of the day, if you're smart and you're able to use those same strategies, you can almost keep it the same. And now, because some people, all of a sudden, like, even when it comes to stocks, especially, we'll say it might be a little different, but with stocks.
Wait, I didn't hear what you said. You said something about 1 million, 2 million.
Yeah. You told me like he's going to get into a new ball game of what he's used to in terms of the funding he's going to have.
Yeah, when you have that much money in the bank, yeah.
Yeah, exactly. It's going to be different from what he's used to. As a matter of fact, to go back to TMR Capital Group real quick, I have a lot of skin in the game in TMR Capital Group, right? I know Jay Morrison put in some money in his, which is cool, but I see his own idea and his own where he's going with it is different from mine. It's not like crowdfunding. Mine is not crowd. Mine is select few funding. I want to select few of the right people, and you know, we're gonna grow with quality rather than quantity. That's the way I see it.
You're gonna discriminate.
There's no wrong or right way to do it, but my own way is I want quality individuals who are going to invest in my grad. I'm not taking anybody. You're going to discriminate. Not everybody. Yes, I'm going to discriminate in a good way. I make sure people know what they're doing, know what they're getting into, and you know we're going to make this money. But back to what you were saying about how the profits change. I mean, about how the management of money changes depending on how much money you're actually managing.
Right.
That might be true in some cases when it comes to real estate, but that's why I say it's good to stay diverse. When it comes to the stock market, for example, the same thing you do with 100,000, you could do with a million. Same thing you do with a million, you could do with
Yeah,
10 million.
because it's all numbers.
You get to a certain point though, where I guess when you talk about people with billions, like the Warren Buffett of the world, people who actually move the market, because if you buy too much, then you can actually move the stock market because of the amount of volume you're buying. That actually happens, believe it or not. So at that point, your strategy might need to change a little bit. But for the most part, you could do almost the same thing. So my point is, if you have a strategy that's consistently and continuing to work, keep doing that freaking strategy. Don't think that, oh, now I have so much more money to invest, I got to all of a sudden switch and do something different, because that's where you fuck up. If you have your bread and butter and it keeps working for you, keep your bread and butter and keep it working for you. If you want to try something else on the side, try it. Get used to it, practice on the side, but don't all of a sudden say, okay, now because I have this, I have to invest like this. No, do what you're used to, do what you've been doing, and it will continue to work until the fundamentals change.
Speaking of fuck up, okay? He, as long as he has a human mind in his head, right? That's going to take discipline. What you're saying is basically discipline, right?
Discipline. It's discipline.
Yeah. But when your brain as a human mind has $10 million in the bank right now that you get to call shots on, it's a different animals that enter your brain. That's why people go to jail on American greed all day long. Okay.
Nah, they go to jail for other reasons. Those guys are stealing and doing all kinds of shit.
But what I'm saying is that it starts from the mind, right? Before they actually take the action, right? So good people, I'm talking about good people, do get themselves in a mess when they are exposed to such amount of money. So what we're saying in essence, I think you and I can agree that what we're saying in the sense that stick to the shit and stick to the formula that work, and then you won't have so much of what they call slippage, in volume. Once you have all that money and you try to operate at that same level in real estate where there's real forces of human beings and real forces of the market, right? It can change, not so much, but it can change. The numbers once the numbers get bigger and the volume get bigger, even the freaking technology will start acting up in terms of data.
That's true. And let me put some numbers to what we're saying, because I said that I want to be very clear about what we're saying and we're not contradicting ourselves. Now, say for example, I'm in this same situation, as Jay Morrison. I've been doing a certain strategy, or certain strategies have like my pony and my horses, and also they've been working the same way, right? I'll do 90% of my investment in that same way. I might take 10% and do something different and try it out for like a year, a couple of months. And if it starts, I'm seeing like that's almost like I'm practicing with that part, maybe 5%. And if I say, okay, this is working, then I'm gonna start increasing it, okay, from 10% to 15% of my portfolio. Okay, if it's still working, it's working nice. I'm fine tuning, it's getting better. I'm making from 15% to 20%. If it starts performing better than my other 90%, which I've always been using. So my point is still be diversified, right? Because right now my portfolio is already diversified. So I already got that on lock, period, right? So that 90% I'm doing is still gonna be diversified. But don't get me wrong. That 10%, I can always use that to try something new. Not something new like stupid, like freaking gamble. But if you have a strategy, you think, okay, this might work better with a certain amount of capital, you might be able to try it out.
Yep.
That's what I'm trying to make here.
Yep. So speaking of crowdfunding, I was going to talk about the cons of crowdfunding. I'm here.
Okay.
Yeah, the cons. You can hear me, right?
Mm-hmm.
The cons of crowdfunding is this, okay? As opposed to what you're doing, which is few selected pre-qualified people, right?
Mm-hmm.
The cons of that is that you have to manage all those people. You have to have resources, maybe in terms of disclosures and all this blah blah. You're going to be managing 9,000 plus people right now, basically, that have basically put their hard-earned $500 into that, right? So you're a little bit more responsible. It's not a con necessarily. It's just something to be aware of. It's going to be different. That's why some people choose to, you know what? You have to be pre-qualified. Yeah, I know you got 10. I mean, I've had people contacted me that they have $10,000. No, did he have some couple, not 10,000, but a couple of $1,000 to invest? And I go, how much do I need to have to invest? I said, if you don't have $10,000, I don't want to talk about you investing. You should really continue to save, really, if all you have is $10,000,
Yeah, and the amount is one thing. The other thing is also the time. Because some people, I don't want anybody who's going to say, okay, here, and next thing, a couple of months later, like, oh yeah, I need my money. Like, nah. If you're going to invest, you got to
think. That's why they have the lockup, right?
Exactly. You got to have a lockup for at least like a year, 2 years, or whatever it is you agree to. So the money is one thing. Also, the time too is very critical, because someone can give you $100,000 and say 2 days later, like, okay, I need that money back. I'm like, bitch, Bitch, I'm not doing business with you. You know, exactly.
Because
So
as
time period, you have to make sure they're comfortable with what they're given to invest, and they're at that point where they can actually invest, and they actually know what they're investing in. They know what to expect. You know, and they're not like some people who are going to be wishy-washy. Like, okay, you know, you have to have a time period. You know.
Yeah, as it is already, things can be complicated. So you definitely need that room. It's not a stock market where you can buy and trade off. The reason why you could do that in stock market is because there's volume, right? Of people trading in and out all day long. But 9,000, 10,000 investors is nothing. That's not a lot of people. So no, you can't just sell your share willy-nilly anyhow, you know, because then, you know, then the market has to find someone to buy it.
In terms of liquidity, yeah, and that affects other people, other clients, and that's important because you don't want one. You may have like, you know, even when you have like just 100 clients, you want one client trying to take that money out too early. That's why people put penalties and all that stuff to affect the other clients, because these are people who are all here trying to do something, and this one person is fucking it up for the rest of them. You know,
right. So with that being said, he found the need to answer all those naysayers in the video. My advice to him would be stop. Like, don't try to answer naysayers. What the hell? Don't try to educate people that don't want to be educated. People that basically make up ideas or have a naysaying about what you're doing. I've already made up their mind, by the way. You're not going to convince them otherwise. Don't waste your energy, resources on that.
I see where you're coming from, bro. I see where you're coming from, but you know what? And I give him credit for that. I feel like his vision, you know, it's not the same vision that you have or I have. Everyone has a different vision. And in his vision, I see why he does that. You know, if in my case, I'm like, fuck you, I don't give a fuck. Keep moving, right? But in his vision, I see what he's trying to do. He's trying to mobilize something for a community. He's trying to be like
I get it.
Yeah. So at the same time, when people say stuff like that and they criticize him, he's not saying that to try and defend himself, right? I think he's saying that to try to educate them so that they can educate other people. And when he does that, he's not just doing that because this is what trying to come on my product. I got to tell them what it is. He has a little bit of compassion for people when they do that, because like this person does not know, right? In his mind, like this person does not know. Let me educate. If you educate somebody, right? And I do understand, and I can relate to that part too. If someone says some bullshit to me, right, and they're talking out of ignorance, if I educate them and now they say like, they're like, oh, all right, that might make a big impact on them, right? That might make me positive on them, might even come back positive on me. But let's say you've educated them, so now they know they can make a better rational decision and not just flying bullshit, right? That's one thing, right? But at the same time, if you educate somebody and like, oh no, you got it wrong. This is how it is. And after you educate the person like so, and they're still saying bullshit. At that point, you know that's a fool, right? Because they know what it is now, and they're still acting dumb, right?
You know, let me tell you something, okay? If you remember what I said people that are naysayers, they typically already made up their mind. Now, the only upside to him recording that video and doing that session is he's creating content.
Yes, you think they already made their mind? No. Look. I've seen.
When you focus, let me finish.
I've seen him do this in his comments too, bro. I've seen him do this in his comments.
Let me finish.
So-called naysayers, right? I'll let you go after that. I promise I'm done. After the so-called naysayers in his comment, right? They said, "Oh, Jay, I'm so worried about this, blah blah." People did this. It was a fund like this before that happened, like 20 years ago, 50 years ago, and somehow it got corrupted and it got destroyed, blah blah. And these people are, you know, exactly a genuine concern. It could be taken as a naysayer, right? But he addressed it, and the reason why he addressed it, I'll tell you why. Apart from just educating them, there are other people who are thinking like them, but they're not saying anything. So when those people who are thinking like them see those comments and see those conversations, they learn from it. So you might be talking to one person, but he might reach 1,000 people who have the same kind of mindset who just learn from that conversation.
Let me clarify. Let me clarify. There's a difference between handling objection and answering naysayers. He was very clear in that video. He called them scholars, I think. He called them people that think they know, people that, you know, that run other hedge funds and they want to educate these people that are trying to buy from him. He wasn't talking to people trying to buy from him. He wasn't trying to handle objections. I think he handled some objections in the middle of all that. I get it. And that's another upside to that video. But I'm just saying, if the energy was basically, if he's putting too much energy into answering people that have already made up their mind, because somebody in the comment area, because I went in the comment area and somebody said, for somebody that's not trying to somebody reinvented the wheel, not trying to reinvent wheels, because it was using an example that, you know, that there's no need to reinvent wheels. I modeled things that already work, because it was talking about how one of his prodigies took him to a meeting and he got some of the ideas from there, right? And so he didn't want to reinvent the wheels. But yet, in the same breath, he's reinventing the wheel by saying, no, we got to build our community, right? So somebody had that to say there. My point is that naysayers generally, there's an upside to answering them. If you're trying to answer, use it to handle objections. Awesome. Create content.
Or like a scapegoat. Yeah. Use that as an example.
Yeah. You know? But don't let that overconsume you. Don't let that overconsume you to the point where it's not necessary, because there will always be naysayers.
I didn't watch the whole video, so maybe you saw something I didn't. Maybe he was.
He was heated.
Maybe it was really over. Okay.
Oh, he was heated. Yeah. He tried to tame it a few times. He tried to say, I say this all with love. If you find yourself having to say, I say this with love, you already crossed the line. That's what usually that means, right? But I get it. It's passionate about his product he just created that just did successfly, and he doesn't want
anything. That's his baby, man. That's his baby.
That's his baby. I get it. But when you focus, and I think he knows this too, when you focus on negativity expands. That's what happens. So don't focus on negativity unless you're using it to handle objections for people that may want to be on the fence, that want to buy. I think it's a good thing. I think it's okay. And you never go wrong when you're creating content, because content is king, not cash.
I see what you're saying. Yeah. I mean, I do see where you're coming from with that. I didn't want the whole video. I guess if you focus in more, if what you're saying is correct, I haven't watched the whole video, right? And it's focusing so much on negativity, I agree that that's not the right thing to do. If what you want to do is focus on those people who are actually liking your videos.
The 9,000 people.
Yeah, focus on people who are actually investing, because they have more people who are like them that they will influence to keep buying your stuff. You can focus on the naysayers, unless you're using that person as a scapegoat to teach the other idiots to stop talking bullshit, right? And you actually do it properly without getting over emotional about it. Then you might get the impact that you want, and you might convert them. So that's about it.
Yeah, emotions is just, it's not.
But it's human. It's human. Things happen. I get it. We all get heated sometimes.
Yeah, exactly. I get it. I like the passion. I like the project personally, and I don't think we had much cons to say. Just things that people should be aware of. Basically, understand the reality of it. There's no guarantee money. There is preferred return, meaning once they make profit, they'll pay you first. Right, but they have to make money first, right? And then we talk about maybe diversity. We need to hear a little bit more about diversity in that fund, right?
Yep, that's the only thing I think you need to add in that fund. And I get it. You don't want to go into waters that I used to. I get it. If you make money using A and B, you're going to keep going into using A and B, right? But at the same time, just not to go back to me, but in my situation, my A and B, or let me say, for example, two parallels. To make a certain amount of money, I use like 10 different strategies. 1, 2, 3, 4, 5, 6 through 10. Right? It was diverse and it worked. So if I start managing more money, I'll feel comfortable using 10 strategies, because that's already somewhat diverse. It's already somewhat diverse. So I use 10 to get me to where I am, and I can keep using this 10 for a while. I might add a few as I keep going on. In his case, he did maybe use, it's an example, use 1 and 2. If 1 and 2 work for you and you got you pretty far, and you're still using 1 and 2, I get why you're using only 1 and 2, because that's what got you there. But in your case, it's just 1 and 2. You might want to think about adding in the 3 or 4, or maybe a 5. Not necessarily investing heavy in your portfolio there, but learn or get someone, hire somebody in your team to manage stocks for you or something else for you besides just what got you there. That's what I'm saying.
Yeah. I mean, did you see I don't know if you saw it. There's a video of him being interviewed by Vlad TV.
Yeah, I think I saw that a while back.
And Vlad, no, the most recent one, I know he did one before, but he just did a new recent one.
Oh, yeah?
And Vlad was flat out like, he was like, you going to invest? I was like, nah. Vlad was like, no, I don't do real estate.
I saw, I didn't see that. I don't think I saw a video when Vlad said nah, but I saw a video where they talk about real estate versus stock market.
Versus stock, right. So they were talking specifically about this Tulsa thing. So this is literally last.
It was a very new one then. Okay. Yeah, new one, I saw that they have a conversation about real estate versus stock market, and I see that the Vlad guys, and what happens with some people is very unfortunate. Some people get scarred. Yeah. And it sucks, because sometimes some people are like, oh, you reach a bunch of real estate investors, right? Some people are like, oh, all I do is flips. I don't want to buy and hold. Some people are like, oh, all I do is buy and hold. I don't want to flip. Why? Sometimes they have one bad first experience. They say, oh, maybe they tried to rent. They didn't do it right. They got a bad tenant. They're like, fuck this shit. I'm not doing this again. Sometimes they'll just back out of real estate, period.
Completely, right? That's what happened to Vlad.
Some people invest in stock market. They might lose a shit ton of money and like, fuck stock market. It's just a matter of doing it right. Don't let one bad experience just ruin all your potential gains, man. You know, find out the right way to do it. Because right now, you just kind of shut down maybe millions of opportunities that you could have gone this way, because now you don't want to even take a look at it because you did it the wrong way.
I guess you can't do it all, right?
It's a human reaction. You can't do it all, but again, diversity is important because if you see something is working, I'm not saying that you should just keep doing things. I least give it a shot after learning it the right way. You can't just freaking do stupid shit. I think Vlad lost money during the stock market crash.
It lost money.
It lost property during the bubble.
Yeah, like everybody else though.
Exactly, and that's what scarred him. And now he's like, "Oh, stock market is where it's at." Blah blah blah.
No.
If I was there, I'll tell him, "Hey guys, you know what? Both fucking work, bitch."
Both. There's no. I mean, it's both. It's two different animals, and it's a great. I like stocks. I like real estate. I even love cryptocurrency from over there right now. but I mean, if I failed in something, it's called feedback. It's not really, I can't just outrightly say, no, I'm not doing that anymore. I think we should always, even as entrepreneurs, we always keep an open mind in general. Like if I'm not buying rent, if I'm not buying I tell everyone, and I was telling you earlier, I changed my vision completely when it comes to real estate. You have to have a space for buying and hold. You must have a space. If you're a professional, I mean, not just regular people, you must have a space for buy and hold. You must have a space for agency work. Remember, we're still going to talk about the topic. Should you get a license, right? You must have for brokerage. Basically, you should have create a space for that. Create a space to flip. Yes, to put houses on that contract and flip that goddamn thing, right? You should have a place for property management. You're not the one answering the calls to come fix toilets. It's just a business operation. You train people to know how to do that. Basically, you have an operation. All of that will help you feed that business in the midst of a recession, ups and down of the business. All of that help each other. Plus, they will tap into each other's resources as well.
And that all comes down to what we've been saying many times throughout this video. Diversity. And if it's you want to do real estate, you want to do stock market. Even stock market, don't just do one freaking stock strategy. Have a bunch of different strategies. Play with some options, calls, some puts, some straddles. Do all that stuff. Play with some stocks. Go long, go short. Do a bunch of different strategies to get you there. Same thing with do earnings plays. Same thing with real estate. Don't just have only one way. You could flip. You could buy and hold. You could wholesale. You could do a whole bunch of things. So have multiple different income streams from each investment, and you will have different strategies.
Right.
You want to do cryptocurrency, trade cryptocurrency. You can actually mine cryptocurrency. TMR, crypto mining, we mine cryptocurrency. Do a bunch of different things. Don't just have one only way. The more diverse you are, the better, and the stronger you are.
And as a last point for me, that's why we teach brand marketing, personal branding, because if you're a personal branded real estate person, when somebody said, I need this, you're not, oh, I don't do that. You need that, you write that down. You help them facilitate that. Sometimes that's additional income in your pocket. You may find it easier than you thought it was, and that may become additional income.
Or you can learn something new.
You learn something new for yourself, even if it's not necessarily
learn something new for them, for themselves, or the next person who will ask you.
Exactly. So that's why personal branding is really, really big right now. If you're wondering, like, how do but all this stuff? No, it's not all that stuff. You're a real estate professional. You are a stock trader. You are into stocks, or you're an entrepreneur. Like, people will say serial entrepreneur for that reason, because they don't want to be put in a box. It doesn't mean you're a jack of all trades. It means you know how to get shit done when somebody needs shit done. That's really what it means, And it makes your life easier. If your business gets bigger in one direction later on, it will consolidate by itself, and you won't have to worry about too much about how do I know. Just naturally you will go in that direction more.
I think people are going to come out and ask you. The more you keep doing this stuff, you can keep it on the hush, like I've done a lot of times too. But the thing is, the more people, like, not necessarily people, sometimes people you don't know, or could be from friends. People are going to come up to you and ask you. Like, I have friends who hit me up all the time, or sometimes friends will say, hey, so give me a number. I have a question for you on this. I have a question for that. Sometimes, you entertain that shit. But at the end of the day, you become that connect. You become that source for all kinds of information when it comes to investments, depending on what kind of investment it is. And at the same time, too, never be afraid to say you don't know something, right? If you don't know something, You
I
can
don't know.
be very comfortable so you don't know it. You know
Let
what
me find out for you.
you don't know. You can find out for them if you want to find out for yourself. But at the end of the day,
Let me do a quick research.
if you feel very comfortable with yourself and you know what you're doing, you can just say, "Hey, I don't know." You might find out and just educate yourself later. But I'm not gonna. You don't have to pretend to be an expert or something you're not an expert on. You give advice on what you know and you're confident about it because you know exactly what you're fucking talking about. And if you have something you didn't know about, like, "Oh, this is interesting," you might go research it. And you
Let me
might
get
learn
back to
about it. You learn about it too. That's I hear you too. Yeah, you doing the sales thing with, oh yeah, don't worry, I got you. I'll get back to you. And that's
Let me
another way
get
of
back to
doing
you.
things.
Yeah.
But for me personally, if I know something, I'll tell you what I know. If I don't know, I'm like, I don't fucking know, and I don't need to know.
Right.
If I don't need to know, I can find out. But at the same time, I don't feel like I need to know because
Yeah. So you can't do
I
everything.
don't feel like I need to tell you something so you sound like I know what I'm talking about.
Right.
Something like
Right.
that.
Right. But when people come to you, they kind of trust you already, usually.
Mm-hmm.
So it's typically not people that don't trust you. If they come to you and they ask you certain
Yeah, they
questions.
had a good reference or referral from somebody who knows
Exactly.
you.
Exactly. So yeah, good one, man. Good conversation, man. Tulsa real
Yep,
estate
yep.
funds. You need to pay us for this promotion. So find a way to pay us. You owe us about how many shares? It's still $50 a share, right? You owe us about 1,000 shares. Would And then
Yeah, I'm already invested in that, just to support. I like what they're doing. Jay Morrison, more power to you. Keep doing your thing. It's good
I
to see
guess
another
I guess
young
they
black
owe me
brother
then.
doing this thing out there. And I'm good. I'm happy that for what they're doing. I like to, keep pushing.
Actually, I want to take this advantage. I do want to interview him. If he wants to reach out, somehow. Well, our email here is what the TMR. What's our email here?
We'll put it in the
Yeah,
video in the
in the
description so
description.
it's
Yeah.
clear.
Please reach out and reach out if you want to do an interview. We would like to talk about this more. But yeah, that's it, man.
Sure. Yep. All right,
Enjoy,
guys.
enjoy,
Like, share.
enjoy Mexico.
Yeah. I will.
Right.
I will. Well, like, share, subscribe, guys. Peace. That's it.
Peace.